Good morning. Welcome to Stock Market Today. It's Monday, January 11th, 2021. Hope everybody had a great weekend. This is Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. It hits your inbox every trading day before the market opens. So Monday morning, let's get back into it. Hope everybody had a great weekend. Obviously, an eventful weekend from a news standpoint, but as always, we want to cut through the news, focus on what is fact, identify the best areas of the market as far as we see them on a relative basis, and try to outperform. U.S. equities were mostly higher in Friday's trading, finishing near the best levels of the day. The Dow, S&P, and Nasdaq all finished the week with record closes. Consumer discretionary, the bond proxies, and tech were the outperformers. Materials, industrials, and financials did close lower on the day. Treasuries were mostly weaker, adding to their bear steepening move over the past few days. The dollar was better on the major crosses, and I think sentiment around the dollar is so washed out that when I look at that in conjunction with a small bullish divergence in RSI, I think I see a trade opportunity. WTI crude was up 2.8%, ending a solid week of gains. Now, as we get to the desk this morning, and as I record this, it is about 10 to 7 a.m., S&P futures are down 50 basis points after Asian markets were mostly lower overnight, with a lot of the main benchmarks there closing near their lowest levels of the day. China was down more than 1%. European equities are weaker. Treasuries are unchanged to slightly stronger after, again, that bear steepener last week. 10-year yield over 1%. Dollar is seeing good gains on the major crosses. There could be a little bit upside there in the near term, but the trend is very much still down. Bitcoin's selling off. I think that one just got a little ahead of itself heading into the weekend. Gold is up 70 basis points after getting decimated on Friday. WTI crude is down 1%. We'll take a look at all of this as we run through the show. But first, the major averages from a power for the S&P, the Qs both closed at record levels, as did the Dow. As I think about the IWM, still very much the best game in town on a relative basis, although in fairness, it did not close at a record on Friday, but okay, it's been closing at records for the most part over the past couple of weeks. So Dow, S&P, and Nasdaq record closes. Not a ton has changed from the support resistance standpoint on the S&P. 360 key, 340 important. For the Qs, 260 key, 300 is important. For the IWM, we are going to bump up near term support to 190. Very near term. You can kind of, I'm not going to crowd the chart. The key level is still 160 to 170 in that range. But you can see here this pullback to around the 190 area created a congestion pattern. I think that's near term, short term, near term, kind of first support, if you will. But the key level is obviously still that 370 mark, which we are well above at this point. Continue to view the SPY trading above 340 as setting the stage for 413. That's it. Simple. Not a ton has changed here as it relates to our views on the trend of the market. I try not to get caught up in the day-to-day. I know there are people out there who want to try to catch every twist and turn. Not what I do. Not how I look at the world. If you're new to following me, I don't, number one, don't have the bandwidth. Number two, just don't see the value in it. I'm trying to catch the trend. I want the big move. I want to kind of calibrate aggression levels within the trend. But for the most part, my views are trying to catch that big move. This big move. This big move. That's what I want. The day-to-day 50 basis point, 75 basis point whips. Not my game. Not going to do it. The trend is up until proven otherwise. Let's hit our market in a minute. What are we writing about to the day in our note for clients? Well, record closes, as I said, for the Dow, S&P, and Nasdaq. Commodities continue to grind higher as the inflation theme plays out. I'm going to just say it. I was early to this one. I started talking about inflation back in June and July. Everybody else seems to have caught up now. Commodities are grinding higher. Now, if you've been following me for any length of time, you've been on the right side of that one. in particular ags, base metals, right? Commodities in general. I probably should have been more vocal on gold when it was going on oil when it was going through $42. I wasn't. For that, I apologize. And actually, I've been lukewarm on gold, right? And a lot of people hear inflation and they think of gold, but it's not been the horse to ride. The horse to ride in the inflation race has been Bitcoin. There's no two ways about it. Obviously, some other drivers in there, but the horse to ride in the inflation race has been Bitcoin. If you're going to look at gold versus Bitcoin, they can both work, but Bitcoin's been the horse to ride. There's no two ways about it. And for those who listen to me in our calls with clients, we've been on the fastest horse. Dollar weakness is well understood and the trade is crowded. I think we could see a near-term pop in the dollar, and futures point to a lower open here today. Major indices from a power bar perspective, not really much change. Everything's still solidly bullish. 7-1 bulls to bears for the Dow after adding 17 bips. S&P up 60 basis points. Nasdaq outperforms on the day. Small caps have a rare bout of underperformance, at least in the near term. But look at that power bar ratio, 833 to 116 bulls to bears. Bonds down tick. Discretionary a solid group on the day. 10-1 bulls to bears there. What's interesting about discretionary is that the group has been holding up without Amazon. So that's kind of interesting to me. But you may ask yourself, why is that happening? Well, because as of December 21st, Tesla's in there. Tesla now the second biggest weight inside of consumer discretionary. So just something to keep in mind when you're watching these groups, know who's the driver. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Stock of the day, Cloudera, software space. I am firmly in the Andreessen Horowitz camp of software is eating the world. So I always look for opportunities within the space when I think it makes sense. And I think Cloudera is a setup if it's a name that you're comfortable with. Bullish rating, strong trend above the rising long-term trend line, strong industry group, software, strong industry group. There's no two ways about it. Cloudera has not been one of these kind of rocket ships up and to the right, though. It's been a steady kind of grinding at times. But what I see here is a topside breakout and then a pullback to test the breakout level, stabilization, and move higher. Now we are oversold. We're outperforming. Money flow turned bullish. I think as long as we're kind of above $13, this is an interesting setup on the long side in a leading area of the market. Now, futures are under pressure today. We'll see if tech is part of that. Should that be the case, I think as long as Cloudera is above $13, there's an interesting setup here for a long idea. CLDR is featured in my note today. It's featured here on the show as a leading stock. New leadership, by the way. Just turning to an outperformer in the past month or so. In a leading area of the market with a nice setup, becomes oversold, overbought, oversold indicators starting to round higher in an oversold position. I like that setup. I want to be focused on Cloudera here today and over the next couple of days. Let's take a look at our sector tracker now, movement of the last 5 days, last week of trading. Energy materials, two of the cyclical groups about which that we've been talking for the past few months, and by few months I mean like 6 to 8. Discretionary, again, as I said, remember that the makeup of discretionary has changed now. With the addition of Tesla to the S&P 500, Tesla is in the discretionary sector. Amazon's still the largest weight, but number 2 is now Tesla. Fins, we've been bullish. We've been talking about it. Healthcare has kind of been a surprise to me, although now, healthcare has been a group where, the group as a whole has been bad on a relative basis. But if you've done the work and drilled down to the industry level, you've isolated opportunity. We've tried to do that. Industrials, tech, and comms round out the groups that are higher. And this, you love to see this board. Why do you love to see this board? If you're a bull, you love to see this board. If you're a bear, you don't love to see this board. If you're a bull, you love to see this board because you have tech moving in the right direction as the largest weight. You have cyclical groups leading, and you have your defensives lagging. Utility, staples, and real estate. Not only lagging, but down. You love to see this board if you're a bull. No two ways about it. If you're a bear, you don't love to see this board. If you're a bear, and you've been bearish, if you've been dogmatically bearish because, it's a bubble and because of the Fed and because of valuations, I guess you got to ask or ask yourself, where'd you go wrong, right? Use it as an opportunity to learn, maybe, if you've been bearish this whole time. And you got to ask yourself, do I have a rigorous, objective process, right? Part of the where did I go wrong situation happens to a lot of people. You got to do it. You got to be intellectually honest and say, I went wrong here, and figure out where you can change it. Industry in focus, insurance services. This is one we've been talking about a little bit within the fin space. Remember, I've been saying it's not just the banks, right? The capital markets theme has been strong, as well as insurance. Insurance is outperformed by 6.5% over the past 6 months. Very bullish, or very strong power bar ratio, 27-4. It's ranked number 11. Has actually moved down 4 slots over the past week, but some names we want to take a look at here. Allstate Corporation, Hartford, and Arch Capital, all with very bullish Jake and Power Gauge ratings inside of a fund that is neutral, but with a strong trend, consolidating and outperforming. So I think there's pockets of opportunity there. Do you want to buy the fund KIE? Maybe not necessarily. Do you want to drill down on 27 names that have bullish or very bullish ratings and potentially look for an opportunity in a sector that's coming on? Yeah, I think you want to do that. I think that's an interesting analytical process. Kind of in a bit of a news vacuum here. Friday's movers and shakers for the S&P 500. Not a ton of news driving what's going on here. We are going to get into earnings season soon, so that'll be interesting. Not quite there yet, so still a bit of a news vacuum. I don't have really much to say about the board. The board is the board. Nothing company specific on any of these names that I could see as it related to trading on Friday. Obviously, Newmont on the loser side, part of the gold area with the price of spot physical gold getting hammered on Friday. That was down. But I don't have anything to add here, so I'm not going to make it up. Let's dive into the charts. Dollar sentiment is terrible. Everybody's bearish the dollar. It's a consensus short. Everybody's bearish the dollar, except for a handful of people, and with a milkshake theory of some sort. That has not played out, quite frankly. It's not played out since March. It's been an utter disaster. The bull thesis on the dollar has been a disaster, and a solid risk management process actually took me out of it. I was bullish dollar. I was bullish dollar in here. I thought this consolidation was going to ultimately resolve topside. It didn't. So the breakdown of the dollar index below 92 got me out. I was wrong on my idea. I thought I was bullish dollar, and I was wrong, and I got out. I didn't dogmatically stay with it, and I'm glad I did because it sent a good message for the rest of what was happening around the market. But what's interesting to me now is with sentiment completely bearish, we have a bullish divergence, right? Look at the higher low on the RSI here. It actually didn't get oversold last time out. I wouldn't be surprised to see a pop back towards the 91, 92 level for the dollar index. Sentiment is terrible here. Gold bugs are mad. But the simple fact of the matter is gold has been underperforming equities for quite some time. It's been underperforming equities since March. Okay. Plain, simple. Gold has not been the place to be. It's been an underperformer relative to equities. Now, spot pulls back, 200-day moving average. We'll see if it can mount a comeback. But again, from an asset allocation standpoint, even from an inflation hedge standpoint, there's been a better horse. There are no two ways about it. It's probably worth doing the work if you haven't already. And rates keep moving higher. Part of our inflation theme, part of our reflation idea. Rates are moving higher. The question is, how high will the Fed let them go? That's the big debate. We know the Fed is not going to let them get out of hand to the upside. The question in my mind is, how fast do rates get to the level where the Fed steps in? If it's just a grind, slow grind, the market will be okay. I think a spike to 1.5 to 1.7 would not be digested easily in the short term. That's going to wrap us up for today. Have a great Monday, everyone.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.